Hey guys, it is Julie here with TipRanks, and today we're taking a look at two stocks that score a perfect 10, so let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two stocks that score a 10 out of 10 on the TipRanks Smart Score. Now that score measures a stock's likelihood to outperform the overall market based on 8 unique factors, and we found today's stocks looking at the top Smart Score stock page on TipRanks. This is where you'll find a list of stocks with the highest Smart Score based on factors like how the best performing analysts are rating the stocks, whether hedge funds are buying or selling, as well as fundamental and technical factors. You can find this tool over on TipRanks.com or by downloading the TipRanks mobile app by using links in the description down below. Now let's get right into our perfect 10 stocks. First on the list, we're taking a look at Remitly Global. Their stock trades under the ticker RELY, currently priced just shy of $22 per share. Now they've seen some phenomenal growth this past year, up over 120%, but you can see a big drop off here. They recently took a 30% drop at the end of October, and we'll get into that in just a second. Now they do score that 10 out of 10 on the TipRanks Smart Score, with insiders buying some shares and very positive crowd wisdom. In fact, insiders have bought $4.6 million worth of shares in the last 3 months, and the number of portfolios holding the Remitly stock has gone up nearly 24% in the last 30 days. Remitly is a financial services company that focuses on international transfer payments around the globe. Their services are focused to immigrants, helping their customers send money internationally in a quick, reliable, and cost-effective manner. And this is a valuable segment in today's world. With a combination of labor shortages in high-wealth societies and relatively low-cost international travel, there's a lot of hiring of foreign guest workers. And the company offers worry-free, safe, and secure money transfers on the global network with 24/7 support. Now, that big drop-off in stock price that you saw a couple weeks ago on the chart was in relation to their last earnings report. They did see some big year-over-year growth with revenue, however, earnings did fall short of expectations. For their third quarter, they did see active customers increase to 5.4 million, which was up 42%, and revenue totaled $241.6 million, up 43%. However, they did post a net loss of $35.7 million. Management did say that they were pleased with the third quarter results and that they're in a strong position to deliver robust long-term growth rates at compelling unit economics. On top of that, they did say they expect to close the year strongly and were increasing their revenue and adjusted EBITDA outlook for the year. So with that report, the stock did drop over 30%, but some think this was maybe an overreaction and could create an opportunity, including one analyst from JMP who says the stock remains one of his top picks. David Scharf says that we maintain our market outperform rating on Remitly and continue to highlight the company as our top secular growth story and small cap pick. We haven't encountered the phrase priced per perfection much over the past 2 years, but our strong sense is that shares of Remitly were reflecting an expectation that the company was going to deliver the same magnitude of upside and raised earnings guidance that accompanied their Q2 report. David is one of 6 analysts that currently have a rating on the Remitly stock, and all of them come in with a buy. Their strong buy rating comes with a price target of $30 per share, which would be a growth potential of 36%. Down below, we can see all of those ratings coming in the last couple of weeks here, ranging from an upside of 12% to a high end of 43%. Our second 10 out of 10 stock is Assurant. They trade under the ticker AIZ, currently priced at about $160 per share. They've seen growth of 32% in this past year, including some recent growth in the last 3 months of 13%. They score a 10 out of 10 on the TipRanks Smart Score with positive new sentiment and very positive crowd wisdom. Assurant works in the global insurance market. They are a nearly $9 billion firm with a sound niche in a major business sector, offering a wide range of products including home and renters insurance policies, flood insurance, vehicle, and end-of-life protections such as funeral coverage. They also offer financial services. The company also pays a dividend and maintains a solid share buyback program. They have been steadily increasing their dividend for decades, currently at 72 cents per share on a quarterly basis for a yield of 1.72% and an ex-dividend date coming up soon on November 24th. The company recently increased that dividend by 3% and authorized another $600 million in stock buyback. And that all followed their latest earnings report near the end of October, where they came out with a massive earnings beat. For their third quarter, Assurant reported revenue of $2.77 billion, well ahead of the $2.7 anticipated by analysts, and earnings per share of $4.29. Then there was $2.65 expected, so a big beat there. With that, the company increased their 2023 outlook to deliver mid to high teens growth in adjusted EBITDA. Following that earnings report, one 5-star analyst from Truist Financial increased their price target. Analyst Mark Hughes put a price target of $205 on the stock, citing the company's Q3 earnings upside, while noting that the valuation on the stock is compelling. The Assurant stock does only have 4 current analyst ratings, but they do all come in with a buy. And that strong buy rating comes with an average price target of $183 for an upside potential of over 14% from current prices. Down below, we can see Mark's price target here on the high end with an upside of 28%. On the low end, another buy rating from KBW with an upside of 6%. So that is a quick look at 2 stocks, both scoring a 10 out of 10 on the TipRanks Smart Score and with a unanimous strong buy rating from Wall Street Analysts. Let me know what you think of these 2 companies and whether either of them catches your eye. I always love hearing from you guys. But of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what those Wall Street analysts are looking at. So please always make sure you're doing your own research and due diligence. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.